A very good morning to everyone and welcome back to another session of Economy and Financial News Analysis. So let us quickly get started with what important news we have to cover for today. So the first news is regarding remittance. We have already read this, right? Regarding the outward remittance that is sent from India to abroad. So for that, what is the limit of remittance that can be sent to abroad? It is 2.5 lakh dollars. Okay, 2.5 lakh dollars per annum of amount can be sent from India to abroad without any restriction. Okay, without any restriction, this is the amount that can be remitted from India to outside. Other than that, we had some other details also that we learned that this outward remittance, it will attract a tax collected at source of 20%, a tax collected at source of 20%. And in this tax collected at source also, there were certain exceptions, like if the remittance is less than 7 lakh rupees, less than 7 lakh rupees per annum, then it will not attract any sort of tax collected at source. It will not attract any sort of tax collected at source. Okay. And other than that, we had read that if this remittance, it crosses 7 lakh rupees per annum, then the tax collected at source would be 20%. It would be 20%. But here also there were some exceptions of education and health. Education and health. So if the spend on health is more than 7 lakh rupees per annum, then it would attract a tax collected at source of 5%. If it is more than 7 lakh rupees per annum for education, here there are two criteria, that if it is a loan, then it would attract a tax collected at source of 0.5%. And if it is not a loan, then it will attract a tax of 5% like health. Okay. And other than that, every other expense, it would attract a tax collected at source of 20% only, 20% only. And in that, whatever these details that we had learned that this would be implemented from July 1, that this would be implemented from July 1. Okay. And July 1 starts very soon. That is exactly why the few banks, they have raised concerns that before implementation of this tax collected at source of 20% and these changes that have been brought, a little more clarification is required. Okay, little more clarification is required, and they are asking if they could either extend the deadline or bring more clarification before the July 1 deadline only. Okay, but here there is no change. Okay, there is no change in the deadline. This has come to news because various banks, they're asking for more clarity or explanation regarding this change. Okay, regarding this change of tax collected at source of 20%, that would be levied on remittance of more than 7 lakh rupees per annum. Okay. Okay. Now let us go to the next. So the next news is regarding a loan, that has been approved by World Bank, for Chhattisgarh educational infrastructure in Chhattisgarh, and for that a loan of $300 million worth of loan would be given from World Bank to Chhattisgarh for educational infrastructure. This is what you need to remember. World Bank, $300 million to Chhattisgarh for educational infrastructure. Okay, this is what you need to remember from this news or this article. Now let us go to the next news, which is regarding current account deficit, So what we mean by current account deficit? It is simply the difference between exports and imports. Okay, difference between exports and imports. If the imports are higher than the exports, then we are in deficit. And if the exports are more than imports, then we are in surplus. Okay. And why we are talking about this current account deficit? It is because the quarter 4 data regarding the current account deficit is out, and India's current account deficit, it has decreased to 0.2%, 0.2% of the GDP in the quarter 4 or March quarter of 2023. Okay, and this is very less than what it showed in the previous quarter, and if you also compare it to March quarter of the last financial year, then also it has shown a decrease. It was 2% in the quarter 3, while it was 1.6% in the March quarter of the previous financial year. Okay, and if we compare to both of this data, you can see that this current account deficit, it has decreased by a very good amount to just 0.2% of the GDP, 0.2% of the GDP, and this is quarter 4 data. Okay, this is quarter 4 data or March quarter data for financial year 2023. And what other things you need to know here? There are two things. So first of all, why we saw this decrease in the current account deficit? It was mostly driven by the decrease in trade deficit. Okay, decrease in trade deficit. This was one of the prime reasons why we saw a decrease in current account deficit. Other than that, though we have seen a decrease in current account deficit, other than that, there are certain places where we have seen an increase. These are the net services receipts. Net services receipts have increased, and also private transfer receipts have increased. Okay, so both of these are receipts, that is money is coming to our country. Okay, so you can understand that when more money is coming to our country, or it is being imported, when the services or trade is exported, then against that some amount of money comes to our country. Okay, and that helps us narrow down the current account deficit. Okay, so these two also have contributed to decreasing the current account deficit to 0.2%. Okay, and here the most important thing that you need to remember is this value of 0.2% of current account deficit in quarter 4 of financial year 2023. Okay, now let us go to the next news, that is regarding government e-marketplace. Government e-marketplace. What is this government e-marketplace? So this is basically a portal, right? It started in 2016, and through this portal, the various governments, the state government, the central government, and various departments under the government, and also PSUs, they do any sort of required procurement of goods and services through this government e-marketplace portal. And here there is also a requirement that of the procurements that are being done, 25% of procurement should be from MSMEs. 25% of procurement should be from MSMEs, and of this, inside this or under this component of 25% MSME only, 4% should be from SC/ST community or SC/ST MSMEs, and 3% from women MSMEs. 3% from women MSMEs. Okay. Okay. And this is what is the government e-marketplace portal. Government e-marketplace portal. And through this, there is procurement that is done by the governments and PSUs. Procurements that is done by the governments and PSUs. And why this is come into news? This has come into news because the government e-marketplace portal, whatever buying or selling of this merchandise or this gross merchandise value, you could understand this, the total value of all the goods and services that have been sold through this platform, it has already crossed 50,000 crores. Okay, if we consider this financial year only, so in only 3 months, it has already crossed 50,000 crore rupees. 50,000 crore rupees. So we are expecting that it would easily cross the total gross merchandise value. It could easily cross 2 trillion. It could easily cross 2 trillion rupees worth of gross merchandise value if we consider the total financial year of 2024. Okay, and this value, okay, of 50,000 crore, It is nearly 1.5 times more than what we saw in the same period a year ago. Okay, in the same period a year ago, whatever value was there, this 50,000 crore rupees value is nearly 1.5 times more than that value. And since in the first quarter only, right, it is the first quarter, April, May and June. This is the first 3 months of the financial year 24 and the first quarter. So in the first quarter only, it has crossed 50,000 crore rupees. So we are expecting that it would surpass 2 trillion rupees in the complete financial year of 2024. Complete financial year of 2024. Okay. And other than that, you can see another thing that was brought in 2020 was that a penalty was brought, a penalty of 1%. A penalty of 1% would be levied on any government departments or agency, PSUs, whoever are doing procurement through this GEM portal. A 1% penalty would be levied on them if they delay payments. If they delay payments with respect to whatever procurement they are doing, if they are delaying the payments, then they will have to pay a penalty of 1%, a penalty of 1%. And here you can see regarding the procurement, so you can see that the PSUs or the PSCs, public sector enterprises or units, they have the highest percentage of transactions when we consider the procurements that are being done through this GEM portal, followed by the central ministries, followed by the states. Okay. Okay. And that there, what you need to remember, the main thing is the quarter one data. In this 3 months or the first quarter of financial year 24, already transactions worth 50,000 crore rupees have been done through this GEM portal or government e-marketplace portal. Okay. Then next we have the budgetary support. Okay. So Sri Lanka is facing, since a few years, it is facing economic crisis, right? It is facing severe economic crisis, because of which various multilateral institutions, various countries also are coming forward to give an helping hand to Sri Lanka. And here the World Bank, it has recently extended or approved a budgetary support of $500 million to the Sri Lanka. Okay, and that is what you need to remember here. You don't need to go into too much detail about this article, just like we remembered for Chhattisgarh educational infrastructure. World Bank, how much money it is giving, for why it is giving. Okay, and this is mostly from your prelims perspective only. So here you need to remember that World Bank, it is giving $500 million budgetary support to Sri Lanka. Budgetary support to Sri Lanka, which is having an extreme financial or economic crisis that it is experiencing. And that is what you need to remember here. Okay. Okay. Next, let us come to the dairy sector. The growth in dairy sector. So it is expected that the dairy sector, it is going to grow over 6% in 2023-24. Okay. And it has been said by the Animal Husbandry and Dairy Minister Purushottam Rupala has said that the dairy sector, it is expected to grow at 6% in 2023-24. Okay. And as you can see, milk production, it has been growing at an annual growth rate of about 6.1% if we consider the last 8 years. And in the coming season also, we are expecting that it will grow over 6%. And this is what you need to remember here. Okay. 6%, 23-24, dairy sector 6%, 23-24. Whenever also you are making your own notes, you just need to write these three things: dairy sector 6%, 23-24. Okay, that is the expected growth. Then we have a report. Okay, and this report is by Havas, which is a global communication agency, and it has come up with a report, that is Meaningful Brands 2023 report. And in this, it has ranked various companies in India, various brands in India, with respect to their meaningfulness. Okay, with respect to their meaningfulness. And in this report, who has topped? Who has topped this report or this ranking? It has been topped by Google. Okay, it has been topped by Google, which has emerged as the most meaningful brand in India. It has emerged as the most meaningful brand in India. So it is Google who has secured the first rank. It is followed by Amazon and YouTube. Okay, here only it is given. This is Google is first rank, Amazon second, and third is YouTube. Usually, who has secured the first rank is asked. So your answer would be Google. Other than that, you can remember. Okay, it is easy to remember Google, Amazon, and YouTube. So you can remember the top three also. Okay, and what is basically what is the meaningfulness? Okay, meaningfulness, it basically means how it has been able to serve the society, how meaningful it has been to the people who have been using the services of Google. Okay, so here you can see that Google Pay is one of the most important financial service that has been provided by Google, right? And with the help of this, there are millions of transactions that has happening with the help of Google Pay. Other than that, also it is creating a lot of impact with respect to the services it is providing. Okay, and here just you need to remember who has come up with this report, the report name, and who has stopped in India. Okay, this is the brands in India. It is not all over the world, but it is with respect to brands in India. Google has stopped, followed by Amazon and you. Okay, but the first rank is more important to remember, that is Google. Now let us come to the next news, which is regarding health insurance claims. Health insurance claims. So, this is a report again, and who has come up with this report? It is by Secure Now. Okay, Secure Now is a tech-enabled insurance broker, and it has come up with the report regarding the insurance claims. Okay, various insurance claims. It has come up with this report, and here the average health insurance claim stands at 42,000 rupees. Okay, this is the average health insurance claim in India. Average health insurance claim in India, and about 85% of the claims were less than 1 lakh rupees. That the claims were less than a lakh. Okay, and other than that, you can see that only 0.2% of the claims were greater than 10 lakh rupees, were greater than 10 lakh rupees, and only 33% of the claims were made by policy holders for their own hospitalization. Okay, so these are a few data here. So what is the most important thing that you need to remember here is this 42,000, which is the average health insurance claim, and this 85%. This is the two main things that you need to remember here. Other than that, you can also remember 0.2% and 33%. 0.2% with respect to the insurance claims which were more than 10 lakh rupees, insurance claim of more than 10 lakh rupees, and 33% or 1/3 of claims were only with respect to their own hospitalization, policyholders' own hospitalization. And who has come up with this report? It is Secure Now. It is Secure Now which has come up with this report. Okay. Okay. Now let us come to the next, which is regarding support that is given for power sector reforms to the states. Okay, support that has or is being given for power sector reforms in these states. Okay, so before going to the news, let us see this part, that this scheme was first announced in financial year 2020-22 budget. Okay, in this budget, this scheme was announced where loans were provided. Okay, loan facility was provided to the states to help them with their power sector reforms. And here under this scheme, the states were allowed to have additional borrowing of 0.5% of their GSDP. Okay, and this was valid for 4 years, that is financial year 22 to financial year 25. And we have already learned what is this GSDP, right? Just like we have a GDP for the country, that is the total value of all the goods and services that has been produced within the boundaries of the country. That will be the GDP. And if we consider the GSDP, that is the gross state domestic product, then this would be with respect to the boundaries of the state, the value or the total value of all the goods and services that have been produced within the boundaries of the state. That would be known as the GSDP. And the states, they can avail an additional borrowing space up to 0.5% of their GSTP for a 4-period term, okay, from financial year 22 when it was announced to financial year 25, they can or they are allowed to borrow money for their power sector reforms, And why this has come into news? Because these states, they have been recently or they will be provided access to 1.4 trillion rupees, 1.4 trillion rupees worth of additional market borrowing in the financial year 24. That is the current financial year. Okay. And this is the amount that you need to remember. That is 1.4 trillion rupees for financial year 24. For financial year 24. Okay. And this is with respect to the financial year 24 data. Okay, that is this financial year, the ongoing financial year. If we see the previous financial years, okay, financial year 23, 24, then in these two financial years, 12 states they cumulatively borrowed around 66,413 crore rupees. And among these states who have borrowed this cumulative amount, West Bengal had borrowed the highest amount. West Bengal had borrowed the highest amount, but remember that this data that we are talking about is not this current financial year, okay? It is the previous financial year 22 and financial year 23. If we see the cumulative data with respect to the various states who had availed this loan facility for power sector reforms, But in this financial year, what you need to remember is this value, the value of 1.4 trillion rupees, 1.4 trillion rupees of additional market borrowing that they will have access to in the financial year 24 for power sector reforms, Okay. Okay. Now the next news or article is regarding green credits, green credit scheme, and this is under Ministry of Environment. Okay, Ministry of Environment, Forest and Climate Change. Under this, there is this green credit scheme that is being launched. And what will happen under this green credit scheme for any individual? It may be any individual, maybe an institution, maybe company, or maybe any organization. If they're doing some sort of environmental friendly or sustainable environment activity like planting trees, or you could say associated things, which will help us with a more sustainable environment. If they are getting involved in any such activities, they will be provided green credits for the same. Okay? They will be provided green credits for the same. And the Ministry of Environment is also thinking of bringing in a trading platform, where these green credits could be traded, Okay. And that is basically the news here. So here you need to understand what is the green credit scheme. So any sort of, you can see here that environmental friendly practices among individual farmer groups, urban rural institutions, private sector, any of these areas, if there is some environmental friendly activities or practices, they will be provided green credits for the same under this green credit scheme. And you should remember under which ministry has come up with this program. That is the Ministry of Environment, Forest and Climate Change, who has come up with this scheme, and it has launched this green credit program under Mission Life. What is Life? That is lifestyle for environment, right? Lifestyle for environment. That is what we mean by life, and it is one of India's nationally determined contributions to the UNFCCC. Okay, and here what you need to remember is this green credit scheme. What it means, we understood what is this green credit scheme, that we are going to be provided green credits, and this is who has come up with this scheme or this program. It is Ministry of Environment, Forest and Climate Change. Okay, and it basically, you can understand that it wants to create a sustainable environment, okay, and not on very, you could say, large basis, at a very small basis also. Let any individual also, they're planting trees or they're doing any such activity or practices which is providing us with a more sustainable environment, okay, then we would consider it, or green credits would be given against it. Okay, so it is promoting, you could say, a change of lifestyle. Okay, just what the word life means, that is lifestyle for environment, where on everyday basis only we adapt and change our lifestyle to bring in a sustainable environment. Okay. Okay. But the main thing that you need to remember here is what is Green Credit Scheme and who has brought this scheme. Who has brought this scheme? That is the Ministry of Environment, and it will be under the Mission Life. Okay, it will be under the Mission Life. Okay. Then we have the PM Pranam. PM Pranam. Okay, so first of all, we need to see, since this is a full form, so you should remember its full form. Okay, whenever you see any abbreviation with respect to any program or scheme from this regulatory examination perspective, it is important that you remember its full form. So what is this PM Pranam? That is Prime Minister's Program for Restoration, Awareness, Generation, Nourishment and Amelioration of the Mother Earth. Okay, this is the full form of the PM Pranam scheme or PM Pranam program. Okay, and under this PM Pranam, basically, it is going to incentivize the use of non-chemical fertilizers. Non-chemical fertilizers, or you could say organic fertilizers. Okay, this is what it is going to promote, use of non-chemical fertilizers, because the usage of non-chemical fertilizers has various effects or disadvantages over the soil quality and soil health, right? So which is leading us to long-term issues with respect to the productivity of the soil or the land as well. So we want to move to using more non-chemical fertilizers, or you could say organic fertilizers or organic manures, and this program or this scheme is going to help towards it. It is going to help towards it. Okay, so here you can see that the Cabinet Committee on Economic Affairs, it has approved this PM Pranam schemes, which is incentivizing states to use alternative non-chemical fertilizers. Okay, and other than that, there are a few other decisions which has also been taken by the Cabinet Committee on Economic Affairs, which has been mentioned here. So let us see it. So it is going to incentivize this. It has approved this PM Pranam scheme. Other than that, it has decided to continue the current urea subsidy. Current urea subsidy will be continued for 3 years from 2023 financial year. 3 years it will be continued with an outlay of 3.68 trillion rupees. 3.68 trillion rupees. Other than that, there are two other things or decisions that have been taken, that rupees 1,451 crore rupees, okay, 1,451 crore rupees of subsidy. It would be given to promote organic manure. It would be given to promote organic manure, and there are also been a decision to bring up or come up with sulfur coated urea, which is urea gold. Okay, and why we are trying to bring sulfur coated urea? It will help address sulfur deficiency, okay, in the soil, and reduce urea use as well. Okay, so you should also remember this part. The question might be asked that what do you mean by urea gold? What do you mean by urea gold? So your answer would be that it is sulfur coated urea. That it is sulfur coated urea. Okay. Okay, and this is the PM. The main thing here is the PM Pranam scheme. Okay, other than that, also few facts and figures that you need to remember, as I noted down, was this: for 3 years, financial year 23, urea subsidy would be continued, and what is the outlay for the same? The subsidy for the promotion of organic manure, which is 1451 crore, and the urea gold, that is sulfur coated urea, which is going to come up, or it is going to make a debut. Okay. Okay. And this full form also, it is important that you remember its full form. Okay, you don't need to by heart it, read it again and again, and you would be able to remember it. Then we have the regulatory bodies in news, and here we would be seeing some of the articles which has come up under the RBI's financial stability report. RBI's financial stability report. So RBI comes up with this financial stability report biannually, that is twice a year. It comes up with this financial stability report. So now let us see some of the important details or some of the important articles that have come up with association with this financial stability report of RBI. So the first article is regarding the asset quality of banks. So here there are two things that we'll have to remember, that banks gross NPAs on non-performing assets, it has come to a decade low of 3.9%. It has come to a decade low of 3.9%. While if we consider the net NPA, then it has come to 1%. It has come to 1%. Okay. So here, first of all, what is NPAs? Whenever someone is taking some loan and they have not been able to return the loan for more than how many days? Can someone say for more than how many days? Then it will be considered a non-performing assets or a non-performing asset. Yes, it would be more than 90 days. It would be more than 90 days. If it is not paid for more than 90 days, then it would be considered a non-performing asset. Okay. And the difference basically between gross and net non-performing asset is the net NPA is equal to gross NPA minus provision. Right? Whenever a loan is being given, we set aside, or the bank sets aside a provision, okay, to basically in case the loan is not returned or there is any sort of fallout with respect to the obligation of the borrower, that then this provision would be used to handle the same, okay, or to manage the same. And when we are finding the net NPA, we are deducting the provision that was kept for the loan, and the net NPA is the gross NPA minus the provisions that were kept for it. And you can see the data here that the gross NPA is at 3.9%, while the net NPA, the net non-performing asset, it is at 1%. It is at 1%. Okay, and this all data is with respect to March. Okay, with respect to March 23. With respect to March 20. Then let us see what all data or what more data we have here. The capital adequacy ratio, that is the capital of the bank by the risk weighted assets, it is also known as CRAR, capital risk weighted assets ratio. That is what we mean by capital adequacy ratio, and this is at a historical high. So we can see the data here, but before that, let us see this part. That the report said that the growth momentum continuing with moderating inflation, the inflation is decreasing. Then the current account deficit is narrowing. We just read the current account deficit is narrowing. Then we are having good foreign exchange reserves. Then there is fiscal consolidation and also a robust financial system, because of which we are currently having a very healthy environment with respect to the economy and also with respect to the banking system. Okay, so let us see some data here. Yes, so here you can see the CRAR, that is the capital adequacy ratio or capital risk weighted asset ratio. It has come to a historical high of 17.1%, historical high of 17.1%, and the provision coverage ratio, it has also improved to 74% provision coverage ratio, provision that is being kept aside, okay, for any sort of loss that might be experienced because a borrower has not returned the loan that they have taken. Okay, so the provision coverage ratio would be 74%, or it is 74%. The profit after tax, it also showed a growth of 38.4% in financial year 23. And this is something we already read, right? The gross NPA data and the net NPA data. Gross is at 3.9%, net is at 1%. And currently the economy is showing a very healthy, you could say a very healthy perspective is being seen currently with respect to the banks. And it is expected that if there is any sort of issue with the global economy then it can absorb the impact. It is currently in a very good condition. Okay. Then let us see some other data also. This is also something that in the financial stability report only this part of data came, which is regarding the retail loans. Retail loans. So what are these retail loans? So you could consider this as personal loans. Okay, personal loans that are taken, you could say for buying, you could say some vehicle, house, all of this that are taken, it comes under retail loans. And according to this report, financial stability reports, the retail loans have been increasing at a very fast pace compared to the total advances that are being given. The retail loans, they are growing at a very faster pace. So you can see here, if we come to the data, yes, that is the retail loans, they grew at a compound annual growth rate of 24.8%. Okay, from March 21 to March 23. Okay, 2 years data. The retail loans, they have grown at about 24.8%, while the gross advances during the same period, it has grown around 13.8%. So you can see, if we compare the retail loans with the total gross advances that have been given, it is moving or it is growing at a much faster pace or at a much higher rate of growth. Then the retail loans, let us see a bit of detail here, but this is the most important thing that you need to remember. Okay, this part, that is what has come into news, that is the retail loans growth, which is at a much faster pace compared to the gross advances. Okay, this part is the most important that you need to remember here. Other than that, since it is RBI's report, we should also remember a little bit of detail here. So let us see the retail loans. They comprised of about 1/3 of the total banking system's gross advances. Okay, they comprise or form about 1/3, that is 33.33%, or about 1/3 you could say, right? Then unsecured retail loans increased while secured retail loans decreased. Okay, unsecured means it is not against some collateral, while secured loans are against some collateral. So unsecured loans, it has increased. The loans which are not against some collateral, it has increased to 25.2%, while secured loans, they have declined. Secured loans, they have declined to 74.8%. Okay, so these unsecured loans or unsecured retail loans, it has increased. Secured retail loans have decreased. Then the gross non-performing asset ratio. Gross non-performing asset ratio of this retail loans is also pretty low at 1.4%. And the share of special mention account, it was also relatively low at 7.4% for scheduled commercial banks. And if we consider the retail asset portfolio of public sector banks, then it accounted for a tenth. Okay, it accounted for a tenth with respect to SMA or special mention account. So what is the special mention account? We have already learned this. So someone, can you tell me how many types of special mention accounts are present, or what it is related to, and any associated information, if someone can give? Yes, there are three types of account. You are correct. So there are three types of account. Special mention account 0, 1 and 2. Okay, 0, 1 and 2. And it is basically, let us say this is the deadline. This is the deadline when the loan needs to be repaid. The loan needs to be repaid by the borrower. This is the deadline. And if there is any sort of delay in the repayment of the loan, then before putting into NPA, it will, if it is not paid for more than 90 days, then it will become an NPA. But before that, it will be categorized into the NPA account. The NPA account, and Nitisha has correctly written that if it is not paid for more than 30 days, then it would be put in the SMA account 1, special mention account 0, special mention account 0. If it is not paid for more than 60 days, then it would be or between 30 to 60 days. If it is not paid, then it would be under the special mention account 1, special mention account 1. And if it is not paid between 60 to 90 days, then it would be put in the special mention account 2. And if it is not paid for more than 90 days, then it would turn to an NPA or a non-performing asset. Okay. Okay. So here you can see the data that we are studying, that this is regarding the non-performing assets, that it has been not paid over 90 days. Over 90 days, it has not been paid. And with respect to the special mention account, that is, it has crossed the deadline when the money was, or the loan that was taken was supposed to be returned. It has crossed the date, but it has not yet crossed the 90 days mark. So between that, it would be under the special mention account, and the share is currently 7.4% for the scheduled commercial banks and a tenth of the retail asset portfolio of the public sector banks, Okay. So you can see here that the SMA 1 and 2 accounts, which have higher proclivity of default, right? Because when the money is not given for a longer term, if it is not given for 30 days, we're expecting that yes, maybe there is certain delay, but the money would be returned. But if the number of days for which it is not being paid or is unpaid, it is increasing, then there is more chances of default, right? So this SMA and SMA 1 and SMA 2 accounts, they have shown improvement. With a total ratio of this both categories falling from 4.2% in March 21 to 2.3% in March 23. Okay. Then other than that, we have read this, right? SMA 1 more than 30 days, 30 to 60 days. SMA 2 is 60 to 90 days. Then more than 90 days is NPA. More than 90 days is NPA. Okay. And some few other data here, that there has been increase in the overall SMA 1 loans. SMA 1 loans, if we consider the January-March quarter, that is the fourth quarter of financial year 23, we have seen an increase in the overall SMA 1 loans, the total stock of this category. The total stock of SMA category loans has fallen by 26.2% in this period. But with respect to SMA 1, it has shown an increase. Though the SMA, the overall 0, 1, 2, all of this, overall if we consider, it has fallen. The SMA 1 loans, it has shown an increase. Then unsecured retail loans, it formed only 7.9% of the banking system credit. Okay, this is not just with respect to retail loan, but all the banking credit that has been given. Unsecured retail loans with respect to the total banking system credit, it is 7.9%. Okay, and then another thing that is regarding the deposits and credit. In previous some news also we have read that the credit, it is increasing more with respect to the deposits. Okay, the credit, it is increasing more with respect to deposits. So you can see that the deposit growth, it has improved to 11.8%. Okay, improved to 11.8%, but the credit growth, it is increasing, or it is growing at a much faster pace of 15.4%. Okay, deposit growth is at 11.8% if we consider this early June, and the deposit growth, the credit growth, it has increased, or it is increasing at a much faster pace if we compare it to deposit at 15.4%. And if we consider the credit to deposit ratio, okay, if we consider the credit to deposit ratio, it has decreased to 94.7%, the credit by deposit. Okay, that is what we mean by credit to deposit ratio. The incremental credit to deposit ratio, it has decreased to 94.7%. Okay. Okay, now we have another news. We will have two more news. So let us see. So one is the ECLGS. ECLGS. So what do we mean by this ECLGS? This is Emergency Credit Line Guarantee Scheme. Emergency Credit Line Guarantee Scheme. And what is this ECLGS? We should know this first. That it was introduced in 2020, and basically it is introduced for helping MSMEs in the COVID period. In the COVID period, because they were experiencing huge economical losses, and many banks were also not ready to give them credit because there were more chances of default by them, and that is exactly why this scheme of ECLGS was brought in, where banks and other lenders were provided 100% of guarantee coverage under this ECLGS scheme to the National Credit Guarantee Trustee Company, National Credit Guarantee Trustee Company. Through this 100% guarantee coverage was given to this MSMEs. Okay, and this was basically a support that was provided to this MSMEs during the COVID period, because they were hit very severely because of the COVID pandemic because of the lockdowns and the closure of economy. They were the most hit, and that is exactly why this ECLGS scheme was brought in. Okay, ECLGS scheme was brought in. And here, what is the data or why it is in news? It is because 16% of the accounts, 16% of the accounts and 5% of the disbursed amount. So this is with respect to the value of amount that has been disbursed, and this is with respect to number of accounts or number of people who have availed this emergency credit line guarantee scheme. It is 16%. Okay, about 16% of the accounts and 5% with respect to the value. It has come into the NPAs. It has come into NPAs, or it has turned to non-performing assets. It has turned to non-performing assets. Okay, and if we consider micro enterprise segments, so MSME, these are three different things, right? Micro, small and medium enterprises. So if we consider only the micro enterprise segment, then it experienced significant stress, and approximately 20% of borrowers and 10% of the disbursed amount has been classified as defaulting. Okay, this is with respect to micro enterprises. But if we consider the all MSMEs, then this is the data, that is 16% and 5%. And this is more important for you to remember. Okay, this 16% and 5%, this is more important. Then let us see what other data we have in. Okay. So the asset quality of MSME portfolio of commercial banks, it has improved. It has improved with gross NPA ratio. It has declined. The gross non-performing assets ratio, it has declined to 6.8%. Okay, if we consider March 23 with respect to last year in the same period, it was about 9.3%, but here it has decreased. It has decreased to 6.8%. It has decreased to 6.8%. And if we consider the gross NPA ratio, the gross non-performing assets ratio for advances less than 25 crores, and which are basically more vulnerable, to slippage, means that it is more likely to experience default. So this range where advances were given below 25 crore rupees, this has also declined. This has also declined to 6.7%. This has also declined to 6.7%. And according to the data also, the public sector banks had 18% of credit card receivable turned non-performing assets. Okay, private sector had only 1.9%, while the public sector bank had 18%. Credit card, so through credit card they take payments or make payments, but they have not returned it, and they have not returned it for more than 90 days, right? That is why exactly it has turned as a non-performing asset. Okay. So now let us come to the last news for today. So what is this news? Let us quickly see. So SEBI The Securities and Exchange Board of India, right, that is SEBI, it has tightened FPI, foreign portfolio investment disclosure regime, and it has also reduced IPO timeline. Okay, so let us see two things related to which it has come up with certain guidelines. One is the FPI, that is foreign portfolio investors, right? We have learned what is foreign portfolio investors. This is when any foreign, okay, any foreign individual or institution, organization, they make investment in our country. Okay, they make investment in our country, and it is mostly in financial assets. It is mostly in financial assets, and it is mostly for short term gains. Okay, short term gains and profit only, that they make this investment. Okay, and this is FPI, and IPO is initial public offering, that is for the first time that the company makes issue of the shares of its company to the public. For the first time it does it. It is IPO, or initial public offering. So let us see what guidelines it has come up with for these two things. So first is regarding the public issue, share of public issue. So it has decreased the time period within which the company needs to be listed from the date of closure of the issue. From the date of closure of the issue, within 3 days, it has to list it in a stock exchange. Okay, stock exchange, it has to do the listing. And it was earlier it was 6 days. Earlier it was 6 days, but currently it has been reduced to 3 days. Okay, remember this number of days, that is 3 days. That is 3 days. Now let us see what is the next. It has deferred a decision, so it has not taken any decision regarding the cost structure, that is the total expense ratio. This is basically, by total expense ratio, what do you mean? This is the total amount or expense for managing or handling the fund. Okay, it is usually used in the mutual fund. When we are considering the mutual fund, for managing the fund, certain expenses are brought in, right? So this would be counted under this total expense ratio. So it has not brought any sort of change in this cost structure. So this is not important to remember, but this 3 days, this is important to remember. Then we would come to the FPIs, the foreign portfolio investors. So if the foreign portfolio investors, they are having more than half of their own holdings, more than half of the total investment that a particular foreign portfolio investor has done. If more than half of it is invested in one single corporate group, okay, then they will have to give some additional, or they have to give granular disclosures, or much more additional detailed information, or you could say disclosure, if they have more than half of their own holdings or investment in just one company, and if they're also holding investments of more than 25,000 crore rupees, then also they will have to provide with granular disclosure or additional detailed information, you could say. If it is holding more than half of its investment in a single company, or it is holding equity assets of more than 25,000 crore rupees, 25,000 crore rupees. And the existing FPIs, okay, they are going to get 3 months. To comply to this disclosure rules. Okay, 3 months, where they will have to bring down the investments they have done to 50% or less, and also comply with the additional disclosures. Okay, and this is something we read, that is the IPO will be able to list on, this is what we mean by stock exchange only. Okay, this is what we mean by stock exchange only, that is just in 3 days after the closure of the issue. Okay, so here what you all remember, 3 days, then 50% and 25,000. Okay, these three things you need to remember. Other than that, 3 months, within 3 months, the FPI, they have to make sure that they're adhering to the rules or guidelines that has been provided. Okay. So now let us come to the MCQs. Let us come to the MCQs, what we have today. So what would be the answer to this first question? That is, which company has come out to be the top company with respect to meaningful brands, and this report has come by, okay, yes, the answer would be Google. The answer would be Google, which has secured the first position, in this report, Now let us go to the next question. That is, how much loan has been approved by World Bank for Chhattisgarh education infrastructure and government-run schools in Chhattisgarh? How much money or how much loan has been approved by World Bank for the same? What would be the answer to this question? Yes, the answer would be $300 million. The answer would be $300 million. Now let us go to the next question, that which organization is going to give a budgetary support of 500 million to Sri Lanka? Which organization is going to do this? Yes, the answer would be World Bank here. Okay, the answer would be World Bank here. Okay. Okay. Now let us come to the next question. Next question, that is, what is the gross merchandise value achieved by government e-marketplace portal in the current financial year? Okay, in the first quarter only, the quarter one, how much gross merchandise value it has been able to achieve? Yes, the answer would be 50,000 crore rupees. Okay, and it is for the first quarter only. The first quarter only it has been able to achieve rupees 50,000 crore worth of gross merchandise value. And we're expecting that it is going to cross 2 trillion in the financial year 24. Now let us go to the next question, that what is India's current account deficit as a percentage of GDP in the March quarter financial year 23? Yes, the answer would be 0.2%. The answer would be 0.2%. Okay. Okay, now let us go to the next question. That is, what percentage of accounts, okay, with respect to number of accounts and with respect to amount disbursed, okay, under the ECLGS, it has turned out to be non-performing assets. Okay. So what would be the answer to this question? Yes, the answer would be B here, right? 16% with respect to number of accounts and 5% with respect to the value or the amount that has been disbursed. Okay, it has turned to be a non-performing asset. Now, let us go to the next question, which is regarding retail loans growth with respect to gross advances. And the data, we got this from the financial stability report of RBI only, that is March 21 to March 23. What would be the answer to this? Yes. So the answer to this would be B only, right? That the retail loans, it is growing at 24.8%, which is at a much faster pace compared to the gross advances, which is growing at 13.8%, which is growing at 13.8%. Okay. Okay. Now let us go to the next question. That is, what is the aim of PM Pranam scheme or program? What is the aim of the scheme? What would be the answer to this question? Okay. Yes, the answer to this question would be this. Okay, promoting sustainable agricultural practices. Because this is regarding non-chemical fertilizers or organic fertilizers. Basically, incentivizing use of organic fertilizers or non-chemical fertilizers and decreasing the usage of chemical fertilizers. Okay, so it would be sustainable agricultural practices, which it is promoting, right? Now let us go to the next. That is, what was the key reform introduced by SEBI regarding IPO timelines? Okay, there was a change that the SEBI has brought in with respect to the IPO. So, what is the answer to this question? Yes, very good. That the timeline has been decreased to 3 days. Okay, 3 days from the date of closure of the issue. It has to list it, or the company, it has to list it on a stock exchange within 3 days. Earlier it was 6 days, and currently it has been reduced to 3 days. It has been reduced to 3 days. Now let us go to the last question for the day. That which ministry has issued the draft Green Credit Program implementation rules? Okay, which ministry has issued it? What would be the answer to this question? Yes, the answer would be B. That is Ministry of Environment, Forest and Climate Change. Ministry of Environment, Forest and Climate Change, who has come up with the draft implementation rules. Okay, and in fact, this is also this rules that has been issued. It is under the Environment Protection Act 1986. Under it, it has come up with this draft implementation rules for the Green Credit Program. Okay. So with this, we come to an end of the session. And it was very good to see all of you very actively participating in the discussion. And I hope all of you have a very good day. And we are going to meet again tomorrow to update ourselves with more important financial and economy. So have a good day. Thank you.